What's going on, guys? So I want to do a little quick video on basically how to know when to sell a winning trade, or when should you think about selling a winning trade. Okay, what we're going to use is a current active trade that I'm in now. Currently that trade is going to be Apple. I'll kind of show you guys an outline when exactly I took this trade, why I took this trade, and I want to show you guys exactly what I mean by when to know when to sell a trade, and when to know when to just kind of stay patient and let the trade work for you. So just coming off of today, we know that we have those Fed minutes coming out a little bit later. So we got this initial spike off of the open here. I did not take any trades this early to the market open. I normally like to wait anywhere from 20 to 30, 45 minutes before I start looking for some serious buying or selling opportunities. Then we had a bit of a nasty little bit of a pullback in the overall market, especially in stocks like the triple Qs. Now, notice on my screen all of the moving averages, right? That's going to be all these different color moving averages here that you see on my screen. Anytime we start to lose these supply zones or these demand zones and try to reclaim some of the supply zones here, it can tend to get very, very choppy when things are bottlenecked and things are, very congested. There's not a lot of room. So especially if you are looking to trade options, I'm just going to use a very general example. If we kind of take this yellow line here that I'm trying to highlight here for you, maybe I should make the screen a little bit bigger so you guys can see. Maybe that'll zoom in a little bit. But for example, let's say, the stock price breaks this yellow line here and we know that we have some supply ahead. Is this an options trade that I want to take between this spot and this spot? No. Why is that? Because there's not enough room in the trade here. Yes, it might go higher, right? It might move up a little bit, but the odds of getting rejected at this zone and then coming back down are very, very likely. So I don't want to be in a trade like that. I want trades where there's either we're over all of these levels of supply with room to run into the next supply zone, or I want to be below a lot of levels, like even something, with this kind of gap on a stock like Apple. We're looking at a price of 159.66 all the way down to around 159.40. It's only 20 cents worth of room. So is that enough room for me to kind of take this trade? Probably not. But here's where I kind of entered this trade. After this sell off here, I noticed us coming down. This is the 5-minute time frame. I noticed us coming down to this 200 simple day moving average. Okay, if you're in my Discord, you understand that the 200 simple is very, very significant, right? It's, like the granddaddy of them all. The 50, if we consider, is the prince, then the 200 is the king, and then, the 20 is our fighter, right? If we can look at, that's our warrior, and then we have a king, which is the 50, and then, the kind of like the main man in charge is going to be the 200-day moving average. So as we came down here into this 200-day moving average, we started to chop around and consolidate a little bit. I like that price action. So what I was telling myself here is we didn't make any new lower lows in this point in time. Yes, I understand it's going to be choppy, but if it does start to lose this 200-day moving average and start to close below it, then maybe I'll think about exiting the trade, because our next demand zone is here, right? 158.90. So this is a lot of room down for Apple to come, and I don't want to be stuck in that trade. As we got over these levels of supply and got into this 200 or this 20-day moving average here, and we closed above it, what I was looking for was a confirmation candle to kind of take out that price action, and I got long in this vicinity here between 8:30 8:35 a.m. Pacific Standard Time, and we've been running all day. But here's the meat and potatoes of this video, and if you guys have watched the video this long, I appreciate that. Make sure to hit the thumbs up and the subscribe button. But here's where you know when to start entering a trade. Look at all of my moving averages, how they're starting to fan out. You see here how everything is crossing over each other, how this is very messy. It's kind of hard to see, like, is there room here? Is there room here? But look at, once we really take this out with a nice green bar here, we get going, we back test the 5-day moving average, we back test the 10, we bounce, we back test the 5, we bounce, we back test the 10, we bounce, and now we're back testing the 5 here again, and here's the 10-day moving average. So I'm looking to close this trade pretty soon here, just due to the fact that we do got these Fed minutes coming out in just about 30 minutes time. But the meat and potatoes, guys, some of you guys ask, how long do I hold a trade? What do I need to let it do? You need to let the trade work, and you need to let your technical analysis kind of guide you, right? I love it when SMAs are stacked. What does that mean? I want the 5 over the 10 over the 20, the 20 over the 50, the 50 over the 100, the 100 over the 150, the 150 over the 200. This is giving us great levels of support here on Apple. We're going to be in this trade once we clear out the supply, and we're going to ride this trade even on these pullbacks, right? We're going to ride this trade as long as we can kind of power trend. Now, what is a power trend? A power trend is when we're hugging the 5 and the 10-day moving average. If we're hugging the 5 and the 10-day moving average, this is on a power trend, baby. You do not want to be selling this even on the pullbacks. Could you have sold here for some profit? Yes. Would you be kicking yourself in the rear here? Yes. Could you have sold on this red bar candle pullback here? Yes. Would you be kicking yourself in the rear here? Yes. Could you have sold here because you got shaken out? Yes. Would you be kicking yourself in the rear here? Absolutely. Now, if we lose the 10, which we might, right? Just getting this close, and we are super extended now. Things are starting to widen out a little bit. If we lose the 10 here, I will be looking to sell, and I've got my sell loaded up here on my other monitor. So let me just have those contracts loaded up just in case we decide to lose and close this. But you can see, as long as we are riding these power trending SMAs on a 5-minute chart, we are going to hold the trade. So if you take 10 contracts, could you sell 2 or 3 here? Yes. Could you sell another one here? Yes. Could you sell one more here? Yes. Could you sell another here? Yes. The point is, you never want to sell when we do that first pullback, if we're staying over, your reason why. Now, I'm getting in on this trade because we closed over the 20 SMA. So this is going to be like I was mentioning earlier. It's my fighter, right? This is my warrior. This is the front guy on, this is the purple line is my soldier, right, in battle. So as long as we are over the 20, I am okay. But if I'm going to ride a power trend, I want to ride the 5 and the 10-day moving average here. And as long as we're above it, I'm going to continue to hold. So each pullback that we have, it's okay as long as we don't lose the 10. Now, if you want to give it max room, you're going to get out underneath the 20. There is no questions about it. It's not even a conversation to be had. If you're in my Discord, you guys already know, if we lose the 20, you are out 100%, whether you are in the green or you're in the red, it doesn't matter. But the moral of the story is, guys, we don't want to be trading when things are sloppy, when we're below all these levels of supply and everything is stacked on top of our heads. We want to trade, and if you can look at this candle, I'm zooming over here with my cursor. We want to trade when we clear out levels of supply, and especially if we're coming from a bottom of a very, very significant level of support, the 200. Now, if we lose this area, this is where we get out of the trade, guys. So as we clear this supply here, and if you look at the top of this wick, we got a lot of room up to the upper Bollinger Band. This candle here would have been a perfect spot to sell, even if we came all the way down, or even if you just took one contract. You guys could have just sold on this candle, called it a day. You wouldn't have made that much money, but the point is you would have made money, right? So as we're coming here, I'm watching this candle closely. If we do close under the 10, I'm going to exit my trade that I'm currently holding. So I'm kind of just keeping my eye on the right hand side of my screen as this comes down here. I want to give it a little time. New candle just started, but you know what? Just to lock in these gains here, I'm going to go ahead and I'm going to sell. Only reason I'm selling here now is just due to the fact that I've been in this trade for over about 2 hours now. So this is plenty room here. I was up very, very significantly on this. I did take 25 contracts, so that paid me out $38.75. And I was in the 157.50 calls. Normally, anytime I trade Apple, I always go in the money. Contracts on Apple are a lot cheaper and the stock doesn't move as much, not like a stock like Nvidia or a stock like Tesla, right? So I'm going to really need to get that $1, $2 move out of it. If I was playing 1 or 2 or 5 contracts. So I like to go pretty heavy on Apple. Again, risk is all subjective to your account sizing. If you're trading a $5,000 account, I do not recommend going out and buying 20, 25 contracts of Apple. Maybe if you're trading a $15,000, $20,000 account, maybe you can do that a little bit easier without being so stressed. But the moral of this video and the point of this video is, all of this action here, this choppiness action, we're trapped in between a lot of supply. These are not trades that you want to be taking. You want to be taking trades when we come out of supply and from a strong level of demand. And as we get over that, even on the pullbacks that you can see here where I'm highlighting over, even on the pullbacks, you want to feel comfortable holding through those pullbacks, just knowing that we can still bounce off of our power trending SMAs, which is the 5 and the 10. Now, if we were to clear out this level here, come down, close underneath the 20, well, then we would just have to take a very, very small win there, or even a break even trade. And that's just the name of the game. That's just the way it works. But if you're looking to, when should you be exiting a trade? Well, you should be exiting the trade technically. And look at here, we still haven't closed. This is why I say always wait for the candle to close. This thing is bouncing around. I wouldn't doubt it if Apple closes back over the 10 and runs higher, but that's okay. That's the name of the game. You got to be okay with that. I'm okay with taking those profits right there. See, here it goes. I'm okay with taking the profits there. We live to trade another trade. But the moral of the story here is that you want to make sure that we are over our power trending SMAs and we are getting out of our trade at the reason why. The reason why is the 20. That's the play that I took here. Here are my power trends. As long as we're riding those, I'm going to continue to stay in that trade as long as we are over those power trending moves. That kind of gives you a little bit more comfortability level on, whether you should be holding or exiting a trade. And also anytime the moving averages get stacked, that is working in your favor. It is bad to trade when it's like this, but you want to be trading when the SMAs are stacked. And look at this. Here's a prime example why you can't get faked out. Now, I'm going to give a clear example. Let's say that I got in on this high of day break, right? Let's say that I missed everything here. Let's say that I missed everything and I was looking at this consolidation at 160, 168 to get in on Apple, and I got in. I would not be selling here unless we closed under. I would definitely take the loss down here at the 20 or even a loss of the 20 just due to the fact that I got in here. But being that I'm in since way down here and now the price is way up here, this gives me the comfortability level to sell that trade. And this is a prime example why you need to respect your technical analysis. And again, it's different to respect your technical analysis if your trade is up here and we start to lose this versus if you're already in the profit pretty significantly down here. Look at this candle come roaring back here. Apple does have room to 162.53. Congratulations to everyone who's catching this. Be safe. Again, remember, always subscribe to the channel. Make sure you throw me a thumbs up and I'll see you guys on the next video. Look at that candle go. Wow.